Well, hello everybody. Welcome to Maverick Trading's class on cryptocurrencies. Let me give you a quick little introduction about myself, and then I'll turn the time over to Mr. Froelich, and he can give you an introduction. And you know what would be fun if we gave each other introductions? Like, I, I that actually might get a little messy. So let's just stick with our own introductions.
I'll go ahead and decline. It just depends on what kind of mood we're in at the time.
That's true. That's true. Okay, so my name is Rob Reinhold. I've been a trader since 1997. I've been trading with Maverick Trading since 1997. I'm one of the oldest traders at Maverick, and I started off day trading stocks, and then I moved into options, then I moved into futures, then I moved into currencies, and then I moved into cryptocurrencies. And one of the things you're going to get from me tonight is that this cryptocurrency, the new cryptocurrencies, they're new, they're exciting, but you're going to hear me probably say a couple times, trading is trading. In the end, anything you trade, whether it's a stock, a bond, a future, a commodity, even if you trade bread at the store, I know that sounds a little ridiculous, but in the end, everything is simply a price. It's a market price. And if the market price goes up in value and you're long, you make money. If it goes down, you lose. If you're short and it goes down in value, you win. If it goes up, you lose. In the end, trading is trading, and it truly doesn't matter what we trade. It just matters how you trade it. So cryptocurrencies, they're fun, they're new. We're going to have a good time talking about them. But you're going to hear me keep saying, look, it's just trading, just simply trading. So welcome. Again, I've been around for a while, so if you have any questions, please feel free to ask.
Hello, world. This is John Froelich, sitting in here with Rob. We're pretty excited about this topic. We debate this topic quite a bit here in the office. This is something that, because it's so new, we started off as day trading stocks back in the day. And then we moved into options, and then we moved into currencies, and then we moved into futures, and now we're talking about this. And this is the new thing, and so we're really excited to talk about this. One thing Rob just barely said is it doesn't matter how you trade it. Though I would disagree with that only, and it's much better if you win. So just keep that in mind. And we're going to talk about some things tonight about how to win. And Rob is correct. It doesn't matter what vehicle you use to do it. Trading is trading. There are buyers and sellers of things, and if you're on the right side of it, you're going to be happy, and if you're on the wrong side, you're not going to be happy. So we'll get into that, and let's push through this. So welcome, everybody. And like Rob said, for any of you who have just joined us, there is a question section on your tab. If you want to make sure you open that. If you have any questions as we're going through it, this is a live class, so we'll be answering those questions as we go. All right. Thanks, everyone.
All right, so let's go ahead and get started. Let's just go over a little bit of cryptocurrency. I already have a couple questions that I've answered about this. Cryptocurrencies are relatively new, and the history, and I really urge you all to go out and read about the history of Bitcoin, because it is like, it's a fantasy novel. It is the craziest thing. So back in 2009, and again, this is not even a person, but it's simply their computer name. So when you log into like a computer forum, you have to choose a name, and someone chose the name Satoshi Nakamoto. And this person was the one who created this whole thing. He created Bitcoin. And he basically created it because he didn't want a currency with the government that was devaluing currency. If you remember back in 2009, we just got done with the crash from the housing bubble, and central banks were printing extra money. They were doing quantitative easing and flooding the market with money. And this person decided, hey, I'm going to make a currency that doesn't have a central bank, that doesn't have a central government, where they can't mess with it, where it has true value. So he created this Bitcoin, and the way he created it was he basically made this ledger. And it's very, very confusing. It's pretty interesting. But basically, once you broke down and completed a certain block, and that's known as mining, you were actually given a Bitcoin. It was like a little prize. It was like a little prize. And once you had that Bitcoin, you could exchange it for other things. And pretty soon people started taking Bitcoin as payment. Now, in the beginning, Bitcoin was mostly taken as payment for illegal activities on the dark web, which is really kind of how it started. That, you know, when you're going to do illegal activities, you can't use your bank account. So it really caught on, this Bitcoin, as a way to make clandestine transactions. And so again, this process called as mining is that people set up these really fast, intense computers attached to big server banks, and they have to crunch an enormous amount of numbers. And just to get one Bitcoin, you have to solve this problem. You have to solve this basically ledger, and then once you do solve it, and again it can take weeks and months of mining to get one, then you're awarded this Bitcoin. Now there is a fixed amount of Bitcoin, and again the founder Satoshi Nakamoto set it up to where at some point you couldn't mine any more Bitcoin. The reason was he wanted there to be a fixed amount, because if you just keep printing out money like all the governments were doing at the time, it devalues the currency. Now here's the great thing is nobody knows who this person is. No one knows if it's a man or a woman. No one knows their nationality. But what people know is that whoever this is, they own 5% of all the Bitcoin. And at the very top, they were worth $20 billion. To this day, nobody knows who actually started this. It's crazy, and everyone has all these conspiracy theories. Like I said, I don't have time to go into all of it today, but it is absolutely fascinating to read the history of Bitcoin and what's called blockchain. Blockchain is basically the ledger that verifies it all. So as I said, there is a fixed amount of possible Bitcoin. The reward is halved every 210,000, so each time it gets mined, it goes down in value, not down in value, but it's less rewarding for people to mine them in the end. Again, I just wanted to cover a little bit about it because this started off with Bitcoin. It started off with Bitcoin. And as I said, here is the blockchain technology, and this is what the rest of the world is super excited about. The rest of the world is really excited about this blockchain technology because the way it works is that, again, to create a new Bitcoin, look at the amount of numbers that you have to attempt, and it's like unlocking this puzzle. And once you unlock this puzzle, it creates a ledger. Now the great thing about Bitcoin and this blockchain is that this ledger resides on everyone's computer. And the programs are constantly checking all the other ledgers to make sure they're always the same. So there's no way that somebody can go into a central place and change anything about Bitcoin because Bitcoin is everywhere. Blockchain is everywhere. So there's ledgers on millions and millions of computers where it can always be checked and made sure that it's valid. Now once someone creates a Bitcoin, it goes into a digital wallet. We'll talk about digital wallets here in a second. But each time a cryptocurrency trades hand, it's added to the ledger, which makes it more complex. So every time there's a transaction where someone gives someone else a Bitcoin for any reason, that gets added to the ledger. And the ledger goes out and is added to all the ledgers in the world. So as you can see here, this is a very safe way to keep a ledger. Imagine if you were a business owner and you had to keep a ledger of your sales and expenses. Now, in the old days, you'd write it down in a ledger book. You'd write down, okay, this is my sales, these are my expenses. Well, in the computerized world, you enter it into a spreadsheet. Imagine that spreadsheet was on every single person's computer in the entire world and could never be changed. You would never lose that ledger. That ledger is the best ledger in the world. So that's really how the digital, the blockchain technology works. And banks are very excited about this technology. Other finance companies are also very excited about this technology.
I was about to say I've lost my wallet this last week, and I figure I'm pretty excited about this digital wallet that I get to carry around with me. That sounds technology's gotten so good with our iPhones and stuff. This digital wallet's the next big thing. I'm pretty excited. going to keep all my $100 bills and my credit cards in it.
John, I'm actually really glad you said that because I wasn't going to talk about this, but since you brought it up, I've had a lot of discussion about cryptocurrency, especially over the past year as the price of Bitcoin and all the other cryptos have gone up. Everyone knows I'm a trader in my life, and so they come ask me, what's the deal with Bitcoin? And I've had a couple people very skeptical about cryptocurrency. And like, well, where is it? Where is it? And I always use this argument. Look, your money in your bank, if you have $10,000 in your bank account, do you actually think that there is a shoebox somewhere with $10,000 in it that's your money? Do you think that bank even has enough money to give all the depositors their money back? No. It's all in a ledger. Your money is a ledger on the bank's books. That's all it is. There is no actual money in a shoebox waiting for you. We've already gone to digital money. Now, yes, you can now go into a bank and they'll give you these pieces of paper that happen to have value for some reason. But other than that, we're already living with digital currency. When you use your credit card, that's digital currency. There's no cash that changes hands. It's all ledgers. And so for any of you naysayers out there who say, what is the deal? We're already in digital currency. Every one of us uses it. So, John, I recommend don't have a wallet. Just use your PayPal, your Venmo, your apps for everything.
Well, I actually had the government put a chip in the back of my neck, so I don't need anything. I just walk around and they just beat me. So that's the future, chips in the neck.
You should get them to put one of those in your wallet too, one of those trackers. All right, so let's talk about these digital wallets. And, I was just talking about the banks, and this is basically what a digital wallet is. It's a company. It's a company that are acting as brokerages. Now, I said banks earlier. Let's talk about how a brokerage works. So let's say you have a stock trading account at TD Ameritrade. And you put, let's say you make a $10,000 deposit and you buy $10,000 worth of Microsoft stock. Again, do you actually think that there is a shoebox somewhere in TD Ameritrade's warehouse with your shares of Microsoft tucked away? Of course not. That doesn't exist. It doesn't exist. It's all a ledger. It's all a ledger. And so we have banks that take in your money and they give you a number on a ledger. We have brokerages that take in your money and put your numbers on the ledger. Digital wallet companies, these are companies that have decided, hey, we want to act as banks and brokerages. So you deposit dollars into them, or whatever your currency is, and then they will allow you to buy and sell cryptocurrencies and hold them in your wallet. But as I said, you're not holding anything. You're simply holding a ledger. Just like when you think you own 100 shares of Microsoft, you technically own it. It's in your ledger, but it's not physical. It's not physical at all. So the digital wallet companies, they work just like a bank and a brokerage. You deposit money in there, they allow you to make transactions, and of course they make money off your money as it's sitting there, and they charge you fees in exchange for their services. So these are digital wallets. Let's talk about what an exchange is, because not every digital wallet company is an exchange. However, most of them are. Exchanges are where buyers and sellers come together. So let's talk about the exchange that most of you will know about, the New York Stock Exchange. Now, the quick history of the New York Stock Exchange, back in the 1700s, it became known that if you wanted to buy or sell stock, you should meet under the buttonwood tree in Lower Manhattan at 9:30 a.m. Now, please don't ask me what a buttonwood tree is. I have no idea, and I really don't care to spend the time to learn about it. But it was right there where that buttonwood tree is that the trading would happen a couple hundred years ago. Now, the problem is the animals that they would bring with them were getting in the way, so they put a wall up on the street. That's where we get the name Wall Street. And it was in that spot they built a building, and it's the New York Stock Exchange. And this is where, if you want to buy and sell shares of a stock that's listed on the New York Stock Exchange, you have to go to that building. Now, you can't go into that building, but what you can do is you can tell your broker or the company that you put your money with, like a TD Ameritrade, hey, I want you to go into that building and buy me shares. Now, of course, that's what actually happened 70 years ago. Someone actually walked in that building and walked around and went to the post. Today, it's all digital, but it all happens inside of that exchange. So the big question is, where is Bitcoin traded? Like, if you ask the question, what exchange is the NASDAQ traded on? Sorry, what exchange is Microsoft traded on? It's traded on the NASDAQ. What exchange are the futures traded on? It's traded on the Chicago Mercantile Exchange. So when people ask the question, what exchange is Bitcoin and other cryptocurrencies traded on? That's not so easy of a question because there are hundreds of exchanges. There's hundreds of them. Now there's some ones that are bigger than others, but there are hundreds of exchanges where people buy and sell Bitcoin and other cryptocurrencies. So if you think about it, cryptocurrencies sound like the strange thing, but you're very familiar with it. And what I really wanted to do is I really wanted to break it down into something that was familiar. You know how banks work. You know how brokerage accounts work. If you know those, you know how digital wallets work. We talked about the New York Stock Exchange, how this is where people buy and sell stocks listed on that exchange. The NASDAQ, that's where people buy and sell stocks listed on that exchange. If you want to trade crude oil futures, well, that's traded at the Chicago Mercantile Exchange. That's where you send your order to buy and sell. Cryptocurrencies, it's the same thing, except now there's hundreds of exchanges out there. There's just hundreds of them out there. And you can go onto any one of them and buy and sell as long as your digital wallet company has access to them. All right, now before we jump into the trading of Bitcoin, I kind of wanted just to go over this concept of fiat currency. This is where anyone who is that doesn't like and accept change too well. Now, I'm not talking about you, of course. You're fine. I'm talking about those other people. But anyway, fiat currency in the old days, they used to make the currencies out of commodities. Now, they made the currency out of gold because gold had value, at least had perceived value. And it didn't matter. It didn't matter if it was 1 ounce of gold that was made in Italy, that was made in Greece, that was made in England. It didn't matter because it was 1 ounce of gold. It was universal. It could have someone else's face stamped on it, but it was still 1 ounce of gold. So the value in the currency was about the metal it was printed on, not about the face or the government that backed it. Now, of course, we got away from commodity currencies somewhere in about the 1600s. Actually, in Holland, it was the first place to issue paper banknotes. And over the next 100 or so years, we actually moved to a paper currency. However, they still were backed by physical metal. And this is called the gold standard. So in the gold standard, basically, in the U.S., they used to print out these notes. So you can go see those. If you go to a coin shop, you're going to see some of these gold and silver notes. They're actually really cool. And you see a red stamp for a gold note, a blue stamp for a silver note. And the way this works is that if you took one of these gold or silver notes into a bank or to the Federal Reserve, you could literally trade it in for $5 worth of silver. That's what you could do. You could take one of these silver notes in, walk into the bank, and they would give you $5 worth of silver. Same thing with a gold note. They'd give you that much gold. So as you could see, the paper still had perceived value because you could turn it in for a base metal, a commodity that people have been trading with for years. In the 1930s, the U.S. was the very first country to leave the gold standard. Everyone thought that it was going to plummet. Everyone said this is a terrible idea. If our money's not backed by anything, it's going to become worthless. Well, it's funny because the rest of the world watched the U.S. and we didn't tumble. Nothing happened. And so all the other countries said, "Oh, geez, you mean we don't have to hold all this gold and silver for no reason? Let's get rid of it." And so pretty much all the countries have left the gold standard. The only one I know that is still on the gold standard is Switzerland, but they're 20% on the gold standard. They've pared that back quite a bit. So the whole idea of this dollar bill or this $100 bill, again, whatever money you have in your wallet, take it out and look at it. It's a piece of paper. It's literally worth nothing. So why is it worth something when you go to the store? Why can you turn it in for something that is valuable? Why can you go to the store and buy something? Why can't you pay someone for their work? It's because it has perceived value. Now this is, to me, the coolest thing about Bitcoin and other cryptocurrencies, and the thing that I just love about them. It's the purest form of trading. And let me explain what I mean by that. If you go buy a stock, or if you watch Kramer on CNBC or any other news things, you'll hear people say like, "Oh, it's a good company. They've got good assets." And so people think that stocks have this base value. And they even talk about things like book value. Now, book value is how much, what if we just sold off all the equipment of this company, how much is this company worth? That's called their book value. So if you take a look at a stock, there is an actual value to a company, even if it's out of business. There's still a value. And if you take a look at real estate, there's still a value because there's still at least something there. So values are there in other assets. But when you take a look at currencies, and specifically cryptocurrencies, there's no intrinsic value. It's all perceived value. It is so pure. And at Maverick, what we do is we talk about being market agnostic, stock agnostic. And what I mean by that is that as a trader, you do not care whether something goes up or down. You just want to be on the right side of the trade. And one of my favorite stories to tell, this is an old story at Maverick that we circulate around. This back in, it was like 2000, 2001, I was having an argument with another one of our traders, Joe Jensen. And I said to him, I said, "I know I'm right." And he said, "I don't care if I'm right. I just want to make money." And at first I'm like, "What are you talking about? You have to be right to make money." And then I sat there and thought about it and realized, oh my gosh, I'm more concerned about being right than being on the right side of the trade. I wanted to be right intellectually. I wanted my ego to be paid off because I was smart. And I realized, oh my gosh, he's right. I just want to be on the right side of the trade. So that's why I love this cryptocurrency stuff, because it's pure. We've taken out any possible reason why there's any value. There is no value. It's completely made up. It's a fiat currency. It's serendipity. It's whatever you want to call it. It's a market price of what people think it's worth today, and that is going to move based on supply and demand. There's no other factors that will move the price around, just supply and demand, and that's the purest form of trading you possibly get.
Let me kind of tie into that just a little bit, and I've been talking to a lot of you on the questions that have been coming up, and I was asked, right now Bitcoin's trading right around $7,700, right? So we're still looking at Bitcoin as a value in terms of dollars. It hasn't been around long enough for it to carry its own. No one's walking around saying that's worth 3 Bitcoins. Right? That's not how people are buying cars yet at this point. Right now, that's why we talk about this stuff so much in the office, is because it has its own perceived value to a degree. Now it trades, like Rob said, it trades very purely because there's nothing to base it on. They're not talking about the buildings and the other things that they have going for them, the assets under management. But what is interesting, and that somebody brought this up, and they said, well, what if you bought Bitcoin right now and then it went up for the next month and it went up 10%? And I said, well, that's great, but what if during that month the value of the dollar fell 10%? Would you be ahead or would you be behind? I mean, how are you going to cash out your Bitcoin? You're going to trade it for dollars, right? So you think that it went up 10% and it went up to 84.70, but during that same period of time, the dollar went down 10%, you broke even. And it's a lot of people don't take that into consideration, when you start to trade, because it still has to come back to a certain value that you're going to use if you're going to use it for anything. So that's I just wanted to bring that up because a lot of people are asking questions about shorting Bitcoin, about how to get into it. So we're going to talk more about that, but I just thought that was a kind of an interesting way of looking at it.
Well, John, you bring up a good point, and we're now deviating off of where we were going to. But you know what? Hey, welcome to Maverick Trading. That's what we do here. We talk about the interesting stuff. What most people don't understand is all currency trades are pair trades, even Bitcoin. Bitcoin is a pairs trade. And again, what I mean by pairs trade is that you are long something and short something else. So if you buy the Bitcoin US dollar, you're long Bitcoin and short the US dollar. If the US dollar goes up in value as much as Bitcoin goes up in value, you didn't make anything. You broke even. Our currency traders know this. This is one of the first things we cover, is that in currency trading, it is pairs trade. You're always long one currency and short the other. That's just how it works. So very, very interesting, John. I'm glad you brought that up. All right, so let's get into trading Bitcoin. Should you trade it? And if you should trade it, how should you trade it? That's what we're going to get into. Now, I'm going to point out some of the things that are not optimal in Bitcoin and other cryptocurrencies. And I expect these things to get better over time. They already have, and I'm going to cover that. But here's the things you need to be a trader. And here's the things you need to have in order to trade something well. You need to have what's called price discovery. Now, back in 2007, I'm going to go back, and if any of you have seen the movie The Big Short or read the book, one of the big problems that people had is they were selling what are called credit default swaps. Now, a credit default swap was basically an insurance product on a bond or a mortgage-backed security. And that market got huge. The problem was there was no exchange. There was no quote on these securities. And it was a huge market. And if you had a credit default swap and you wanted to sell it, you had to call around to all the brokerage firms and say, hey, I've got 10 of these. Do you guys want to buy them? And if they said yes, you would have to negotiate the price right there. Now, you could probably negotiate a totally different price with another brokerage. In the end, when the you know what hit the fan, everyone looked at their credit default swaps and said, oh my gosh, what are they worth? And they couldn't figure it out because there was no buyers anymore. Now, surely there were something, but what are they worth? No one knew. And banks, by law, they have to write their assets down to market value. And it was very difficult, and it caused all sorts of problems. So having a market where you see the quote, you see what it's worth right now, is huge as a trader. And people were trading securities that didn't have price discovery. So that's the first thing you need as a trader in order to trade something, is you need to know what the price is. Number two, you need liquidity. You need volume. Number three, you need a transaction guarantee. Now, what I mean by that is that there must be what's called a counterparty. If you're buying something, someone has to be on the other side to sell that. That's how markets work. If you go to a market and you're the only one there, unless you are schizophrenic, you are going to have a hard time selling anything. So, good luck. You have to go to a market where there's lots of market participants. The transaction guarantee is where I think is the scariest thing out there. In the stock market, they have made the stock markets and the options markets, the futures markets, the commodities markets, all the regulated markets. They have things called market makers. These are market participants, and they're called market makers. Now, yes, they're given many advantages, but they also must always provide a market. Their job is that there's no other buyers of a stock. they have to step in and buy. So they implemented this because there were times in the olden days when everyone would go to sell their stock and there'd be no buyers, and the price would plummet until they found buyers. So what they've done is they've paid these companies, well, they haven't paid them, but they've put them in a situation where they can make a lot of easy money, but in the end they have to fill the trade. So again, if Microsoft comes out and says, oh, well, let's use someone like Netflix. If Netflix comes out and says that they're out of business or whatever, if you want to sell Netflix stock, you can still sell it. There has to be a market maker. Now again, the price will be dropping fast, but you get in the queue, you get in the line, and you will be able to sell your stock. And it also needs to have interconnectivity with the banking system. And this is basically the idea of you're taking cash, buying an asset, selling that asset, and turning it back to cash. You need to have a way to get that money out to where you can use it. So that's really what you need in order to be able to trade something. So let's put Bitcoin through this test. Let's talk about price discovery. Now, when we look at the NASDAQ, when we look at the market price of Microsoft, we're going to go to the NASDAQ, and the NASDAQ is going to show us this is the bid, this is the ask. Now, Microsoft isn't traded anywhere else. Now, as I say that, I say, oh, there's always a, of course. Again, there's dark pools, there's other market participants, but they all get included into the NASDAQ. The NASDAQ is like a big circle around all the market participants. So you know exactly to the penny what Microsoft is trading at right now. And it can't be traded anywhere else. It's only traded there. We talked about the cryptocurrency exchanges. And here's the problem is that there's hundreds of them. And the market price is whatever it's trading for at that exchange. So I actually pulled these prices about 3 or 4 hours ago. I wanted to get the most current prices I could. And you can see that there is quite a bit of difference here. I mean, there's basically $30 difference between the lowest and the top. Now this is better, and let me tell you why this is a little bit better. This used to sometimes be up to $100 wide, to where if you wanted to go buy it on Coinbase, it was $7,800, and on Kraken, it was trading at $7,700. So what's the right price? You're trading on Coinbase. You can only trade your cryptocurrency on Coinbase. Well, what if the price on all the other exchanges is significantly lower? Guess what? You still have to buy on Coinbase. So this idea of price discovery is very tough on cryptocurrencies because of all these different exchanges. Now, this has gotten better because of the futures market. I'll talk about that in a little bit, but it used to be a big issue. I assume that over the years there's going to be consolidation in Bitcoin and other cryptocurrencies, and the exchanges are going to come together where there's just a few major exchanges.
Hey, one thing, let me just add on this as we're talking about this scenario. I've had a lot of you that have talked about how expensive the fees are to jump in, like that everyone has such high charges to be able to trade Bitcoin. It is true, and that's true. And as Rob was just saying, things will definitely improve. I remember when we first started trading stock, it was $22.50 each direction to get in and out of a stock trade. It was $45 to make a single trade in and out. And now, if you look at it, it's pennies. It's pennies on each side of it. So things definitely change as the markets got broader, as that was more widely used. And this is a new market, so it's to be expected that things will cost you. So when you're thinking about that type of thing, if that's a problem for you, if you don't like the fact that you're going to be spending a significant amount of capital to get in and out of a trade, it might be a little tough. And especially if you don't have a bigger account, it gets really tough when you're having such big fees taken out of your trade. So just keep that in mind. That there's about 7 questions that were all basically about that. So I just thought I'd say it out loud for everyone to hear.
All right, thank you so much. So again, price discovery, to me, this is a big one, but really the biggest one that I've got an issue with is this liquidity. As I said, if you've watched cryptocurrencies will go sideways and sideways and sideways for days, and then all of a sudden Bitcoin drops $700 in like 2 minutes, in a second. And it's really all about liquidity. And if anyone comes to market with a large amount to sell in a period where there's not a lot of people buying, the prices go crazy. The prices plummet, the prices spike, and it's because of liquidity. There's low liquidity. And again, there's no counterparty to take the other side like there is in the regulated markets. The market makers must take the other side, which again, it helps cut down volatility, it helps cut down on slippage. So this liquidity issue, and again, remember, you're trading at one of those exchanges. So you are bound by the liquidity of that exchange. If you want to sell 10 Bitcoins and there's only 3 other people on the other side, well, guess what? The price has to fall quite a bit in order to entice new participants to come into the market and buy your Bitcoin. You're going to see a big fall. You're going to see a big fall. And here's the thing: is that the price could fall on one exchange for that reason, and not on any of the others. And then it probably bounces back up and goes back up to the price of all the others. So there's all these problems. There's been exchanges that have crashed to where people couldn't get out of their cryptocurrency for a day. Hey, sorry, we're down for the day. You can't do anything. There is also ones that have been hacked, and Bitcoin has just been stolen from people. So to me, there's a lot of problems with this, a lot of problems. So let's talk about how to solve it. Safest way to trade cryptos, and sadly right now it's just Bitcoin. So Bitcoin, they've made futures on the CBOE and the CME. And what these exchanges have done, now again, these are regulated exchanges with long histories, with government entities and rules that bind them. They've gone out and they've created futures contracts based on a collection of the prices at the exchanges. So they have a very sophisticated algorithm that goes out, looks at pretty much all the major exchanges of Bitcoin, and then it makes a market price of the future. Again, the futures contract is, I'm not going to go into that, but again, it's going to follow the exact price. Sorry, not exact price, but it's almost the exact price of what Bitcoin does. Now, here is the great thing about futures contracts. They're regulated. Number 2, there's tons of liquidity. Number 3, there's a guaranteed counterparty. There's a guaranteed counterparty. Meaning, if no one else wants to buy that Bitcoin future from you, guess what? One of the market makers has to step up and buy it. All of a sudden, this solves a lot of the problems that we've had with Bitcoin and other cryptocurrencies, is that all of a sudden, now we can basically trade the same instrument, but it's in a very safe exchange. Now, let me also tell you what is fantastic. The only people that can trade on the futures exchanges are regulated broker-dealers. That's a huge thing. And the reason I say that is because to trade on a registered broker-dealer, all of those accounts are going to be insured by the government. They're going to be SPIC insured. Which means if that company, or that, again, we talked about banks, brokerages, digital wallet companies, they all serve the same function. If one of those companies goes out of business and loses all their money, the government will make you whole. Just like when the banks went out of business in 2008, the government came in and made people whole up to, I think it was 100,000, but they moved it to 250,000. So all of a sudden, it's so much better this way. You're trading the same instrument. You're trading Bitcoin. And here's another great thing. You can go short a future. Now, here's a real quick crash course on shorting if you're not familiar with it. Shorting is just the opposite of what you know. You buy first, you sell second. Well, shorting is you sell first and buy second. You can sell something for $100, and then if the price drops down to 90, you can buy it at 90. You made $10. Now, how that all happens, I don't have the time to get into that. But you can short a future. Probably to me, the biggest reason why I don't love trading cryptos is that you cannot go short the actual cryptocurrencies. You can only be long. Now remember, as a trader, we're agnostic. We're market agnostic. We don't care if something goes up or down. We just want to be on the right side of the trade. And as I said earlier, We don't care about about being right. We care about being on the right side of the trade. In cryptocurrency, you can only play one direction. You can only play up. And what happens if the market goes down and down and down and down? You better just hope you're in the sideline. That's all you could do, is just sit on the sideline, and hopefully you don't try to buy it like an idiot. But people are idiots, and they're going to go ahead and buy it when, oh, it's down 20%, I'm going to buy it. Well, Bitcoin lost 60% of its value. So here's a great thing is, on the futures, you can trade it. And that's why back in December of 2017, we actually issued a press release and told all of our traders, you are absolutely free to trade Bitcoin futures in your trading accounts with us. So again, to me, this is the way you trade it. This is the way you trade it. So there's two contracts. There's the XBT, and that is equal to 1 Bitcoin. There's the BTC, and that's equal to 5 Bitcoins. So again, it's going to trade the same, but you have to buy. You're going to be 5 times levered on the BTC. You're going to be 5 times levered. So again, if it goes up, you're going to make more money on the BTC. If it goes down, I think you guys get the point. So this is what we've authorized our traders to do. And I got to say, we've seen our traders dabble around a little bit in it. But as I said earlier, trading is trading. Trading is trading. And everything you trade is simply a price. It's a price. And that price is going to go up or down. And I always give an analogy that all of the different products you can trade, stocks, bonds, futures, forex, blah, cryptocurrencies, anything, it's just like a car. Look, a car is a car. A car has a motor, it has 4 wheels, it drives on the road, and the way you drive any car is the same. But we all know that there's some cars that are slow. There's some cars that are faster, and then there's race cars. But in the end, a car is a car. But the speed of the car is different. So when we talk about trading and talk about products we can trade, we're really all just talking about the same thing. If you buy a stock like Philip Morris, that's a slow car. That's a slow car. You buy a stock like Walmart, that's a slow car. Well, guess what? You can buy a faster car like Netflix or Amazon. Or, you know what you can do? Go into the options market. Get an even faster car, or futures. Cryptocurrencies, to me, is the race car. It's the race car. And it's really scary that people that don't know how to drive a Dodge Stratus, which, best car ever. Best car ever. Again, yeah, big brag here. I own a Dodge Stratus. For those of you that watch SNL, you'll get that joke. But people that can't even drive a Dodge Stratus correctly, they don't understand the pedals, it's really scary that they're getting into a race car, because that's never going to happen. It's never going to end up with a good result. So real quick, let's cover the margin requirements. And this is another reason why I just don't totally get why people trade cryptocurrencies, is that in cryptocurrencies, there's no margin. You put up 100%. You put up 100% of the money. Now again, you can buy half of a Bitcoin, you can buy a fourth of a Bitcoin, you can buy 0.0001 of a Bitcoin, but you still have to put up all the money. For the futures, you only have to put up 30% of the money on the SIBO. So if you wanted to control $10,000 worth of Bitcoin, you would have to come up with $3,000. That's what your margin would be on it. It's going to be it's way better that way. You have less money tied up to take the same position. It gives you a lot of extra capital to do other things with. So again, there's so many advantages of trading it a little bit differently. All right, so let's go ahead and kind of wrap this up, and then I'm going to go into some Q&A here for a little bit. And again, I know John's furiously answering questions over there, so if you have any questions, keep typing them in. The conclusion is the actual cryptocurrency, there's still some problems with it. The inability to go short. No, there's no margin, so yes, it's volatile. Yes, it's volatile, but again, I'm going to walk through just some things in regular currencies. So yes, we can see cryptocurrencies go up 8% 8% in a day. And now normal currencies, they can go up about, a decent move is 1% a day. So to buy $100,000 worth of cryptocurrency, you need to have $100,000. And if it goes up, you make 8%. Hey, good job. You just made $8,000. Good job. Well, in any other currency, and we're talking about foreign exchange here, for me to buy $100,000 worth of a currency, my margin I need is about 3,000 to 4,000, somewhere in there. It depends on what brokerage you're with. And then it goes up. Okay, well, you just made $1,000, but you made it on 3,000. You made 33% return over here. So as you can see here, when you take a look at cryptocurrencies where there's no margin, yes, you get bigger percentage moves, but the fact that there's no margin, you're actually going to be making way less on percentage returns. So, my opinion, I've had many people ask me, hey, should I trade cryptocurrencies? I always say, yes, but just take the crypto word out of what you just said. Should I trade currencies? And the answer is, yeah. That is the safer game. It's a huge market. The currency market, the foreign exchange currency market, is the largest market in the world. 5 billion, or is it trillion? I can't even remember. The numbers are ridiculous of the volume that goes through. Is it trillion, John? Yeah, it's trillion. $5 trillion a day goes through the exchanges. And again, there is a centralized exchange to that. Oh, the numbers just keep getting better. So all of a sudden, we've got a market that's bigger. Price discovery is great on currencies. The leverage you get, you can make more returns than cryptocurrencies. And it's the same game. Does everyone understand it's the same game? It's a market price. That market price is going to go up or down based on supply and demand. It's the same as Bitcoin. It's the same as Ethereum. It's the same as Litecoin. It's the same thing, but you're able to do it in a much safer way. You have safer accounts. You have price discovery. You have costs. And it's, again, to me, it's a no-brainer. If you want to trade cryptocurrencies, trade currencies. I know you might think it's not the same thing, but it is literally the same thing.
It's Rob. Just this getting lots and lots of questions about exactly that. Talking about Coinbase, for instance, at this point, cryptos are young enough that you're basically trading the cryptocurrency against whatever currency you use. Because if you are in Coinbase, when you want to withdraw your money, you're not withdrawing those Bitcoins. You're not downloading them just to hang on to. You're going to be taking them out and turning them back into cash. If you made $20,000 in Bitcoin, you're going to take them out and put them into dollars. So again, that's exactly what currency trading is. And I got asked, do I think that at any point these cryptocurrencies will be trading as pairs against each other, where you can go long, say, Bitcoin and short Ethereum at the same time? Absolutely, that will happen as soon as the market's big enough. As soon as this is traded widely enough, then that will definitely happen. The markets will just naturally become like that. When people see ways to make money, it will develop. But the time frame on that, I have no idea. I have no idea when the markets, the cryptocurrency markets, are going to be the same as the stock market or the options market or the bond market or the current currency market. There's no way to know exactly what the time frame is. But obviously, things are always evolving. When it comes to currency, it's always just a promise. A currency is just simply a promise to pay for something, right? That's really all that anything is. So it will come in time. The cryptocurrency market will improve, but in my opinion, for it to be where it would be something I would be comfortable trading regularly, it would be years down the road, very likely. Then again, as fast as things are moving, it might be shorter than that. But they're definitely making progress. As Rob mentioned, they are changing. But right now, it makes way more sense to trade the dollar against the euro than it does to jump in and try to scalp Bitcoin. So just keep that in mind. One thing about here at Maverick is we are always focused on risk management and on capital preservation. And so for me personally, it's much easier to maintain consistency and to follow my plan of trading than to jump in and put too much into, say, Bitcoin or Ethereum or any of the other cryptos. I have no problem with people that do, but I always explain to them how they need to be able to manage their risk. When they get in, have an entry point, have an exit point, and then I ask them how are they even going to find out if they're getting in at a good point or not? And there's really not a lot of people that can answer that question. I think everyone's kind of trying to figure that out, but for me personally, it's a little bit of a better idea just to stay for the time being, sit a little bit on the sidelines of crypto and keep your eye on it. And while you're doing that, trade with real currencies that are established and have been trading very widely all across the globe. So keep that in mind, just to sort of piggyback on what Rob said. Plan your risk, manage your risk, buy low, sell high all the time. That's all we do. So, perfect.
All right. Hey, I've been just taking a couple of questions here. So someone has asked me who we trade through. We trade through Interactive Brokers, and Interactive Brokers it's just the best company as far as execution, costs, spreads, everything is the best. And recently, for those of you that don't know, some things that have happened recently was the SEC made a law back in September of 2017, so almost about a year ago. And they basically came out with a law that any registered broker-dealer, which is someone like TD Ameritrade, E-Trade, Charles Schwab, they could no longer offer levered FX trading to any of their clients. Now, the reason they did this was that about 2.5 years ago, the biggest U.S. company that did Forex was called FXCM. And years before that, the Swiss National Bank had pegged their currency to the euro, and they'd kept its value down. And then in the middle of the night, unexpectedly, they removed that peg that had been there for 2.5 years. And the market freaked out, and the Swiss franc jumped 30% against the euro. And what happened was the losses were so big in FXCM. Now remember what I said about banks, they just pool all the money together and you're a ledger. Well, that happens in FXCM and all brokerages. The losses were so big that virtually the money was gone. They had lost all the money that depositors had put in. FXCM was gone. They were out of business. And all the people that had accounts with them, they were out of luck. Now, luckily a private equity came in there and bailed them out and made people whole. They basically took over 94% of the business, and they've been able to actually get their investment back. But if you go back to 2010, there was a company called MF Global that did the same thing. If you remember John Corzine, MF Global, same thing. They were a futures and Forex trading company, and they went out of business. $6 billion was theirs, and anyone that had an account with them pretty much lost all their money. So the reason why we think it's such a great deal we trade with IB is that we are large enough in size and we're institutional that we meet certain exemptions. So we can trade a levered Forex at Interactive Brokers. And as well as I know, we're one of the only proprietary trading firms that can do that because we have that kind of size. So again, it's really cool. Again, trading currencies is fantastic at IB. IB always has the best rates. They publish what percentage of their Forex traders were profitable during the month. And it's funny because some other brokerages do too. IB is always like at about 50%. And then everyone else is like at like 12%, 8%, 7%. It's just where the pros are. It's just where the pros are. All right. Hey, let's wrap this up. We're getting a bunch of questions. So I'm glad we have this up. Some people said, hey, I only see the options application on your website. Where's the FX website? Well, we have two separate divisions at Maverick Trading. We have an options and futures division, and we have a Forex division. So again, you're going to gravitate towards one of those. If you're new, I would say check out both. See which fits your personality better. Now, let me just say this, and I'm going to make general statements here, so Of course, there's always circumstances, but our options are more slow and steady wins the race. So your personality, if that's more your personality, slow, steady wins the race, that's probably where you should go. If you're a little bit more of a risk taker, you love to get in and out of stuff, then Forex is definitely the place to go. So if you can see down below, MaverickFX.com is the Forex division, and MaverickTrading.com is our options and futures division.
Hey, Rob, one thing that that you brought, I didn't hear if you brought it up or not. We had talked about it earlier today. The one thing about Forex, if you're not familiar with Forex trading, it's one of its big selling points is all the leverage, right? And that's why a lot of people like to trade with cryptocurrencies too, but because of the big moves. Leverage is basically the same as volatility, where you're giving yourself a lot more power and a lot more ability to make money as things move. Well, in the cryptocurrencies, especially in Bitcoin, you can see that thing move 10% a day. And you might not see things move that big in the Forex market, but you get to leverage yourself at 40 or 50 to 1. And with that much leverage behind you, you don't need something in the market to move 10%. Right? You need it to move 1%, and then you've got the exact same thing. Not even 1%. I mean, it needs to move far, far less. So keep that in mind. If you're interested in some of these big moves, I think a lot of people with cryptocurrencies, they get caught up in the hype of like, oh man, if you would have bought this, if you would have had $100 worth of Bitcoin back in last 3 years ago, you would be worth thousands of dollars. Well, that's all well and good, but you can do that exact same thing with trading Forex or with trading options, because these are leveraged instruments. Right? We're talking about the ability to use that leverage, but you can do it in a much safer manner. And we teach all of our traders how to use that. You want to use that volatility and that leverage for your benefit, but at the same time, you need to have the ability to protect yourself, because running out there and just going for it without any safety net is the quickest way to be out of the game. So keep that in mind. If cryptocurrencies has always been a super interesting thing to you, you should really check out Forex or options. It's like Rob said, options has a little less leverage, and it's something maybe for bigger players, but the Forex market is much, much safer than the crypto market at this point. So just keep that in mind. Rob, do you want to talk about what's going on with the FX?
Yeah, for sure. So again, I can see that we've got a collection of some of our traders, our current traders, and we have a lot of new people in here. We love what we do, and hopefully you can tell that tonight. I know me personally, I know John does too. I love to talk trading. I love to get into all the weird areas of trading and really talk about some cool stuff. Come check us out. If this is something you want to do, you want to trade professionally, you want to trade for a firm who backs our traders with capital, come check us out. So we're offering anyone that came here tonight or sees this on the video, come join us and see what we do. We meet every single Friday. We meet every single Wednesday as a group, as a firm, and we talk about the markets. We talk about trade setups. We're talking about trades we're in. We talk about trades that we're thinking about getting in. We do that on Sundays, and we do that on Wednesdays. And now we also have other classes during the week where we're always talking with our traders, but this is what we do every single Sunday, Monday. We'd love to see you join us at one of our Sunday sessions. So again, if you are interested in that, then reach out to one of our recruiters. We'll have one of our recruiters will be sending you an email basically saying, hey, do you have any questions for me? Is there anything you want? Just let them know, hey, I'd really like to go to that FX room and check out what you guys do. Also,
hey, real quick, one of the things that's so great about this is I've had people talk about this a lot, is that the way that the FX room is set up is it sets up traders for the week. So it's a big market out there. As we were talking about, the Forex market is the biggest market out there. So how can you possibly sit at your screens and look at this entire market? Well, it's very easy. You get together with a big group of people where you have lots and lots of eyes looking at it, and then you discuss it. So we get together and we talk about what just happened, what announcements are coming up, what's going to move the market, what's going to change the values of the different currencies. And it's been a huge, huge help. This is something that we we started back in the very, very beginning when we first started Maverick as a proprietary firm. This was kind of the cornerstone of what we did. And it's what gives everybody the ability to agree or disagree, but we can kind of come to a consensus of which direction are going. And we have some of our top traders that give their ideas out that say, hey, I like this currency, I like this position, and here's why. And it really allows you to grow as a trader. If you're brand new to trading, this is going to be invaluable to you. So definitely, as Rob said, come check it out. We'd love to just show you what we do. You can decide for yourself if it's something for you or it's not for you.
Awesome. And as John said, check out our members area. One of the things I always, I love challenges, and I don't know why. It's just how I was built. But we have a bunch of tests. So our traders, to become eligible to trade firm capital, they have to pass tests. And again, our tests aren't meant to discourage anyone. You can have unlimited retakes. But we want to make sure that everyone knows all the proper principles of trading, risk management, all that stuff. So again, if you want to come check it out, we'll give you full access to our members area. Inside, you can poke around. You can check out any of our classes, any of our software, any of our products, any of what we're doing, any of the recent trades we've been making. And then, of course, I always say jump in and take the test. If you think you know trading, let's see what you know about trading. And I think you'll see that, hey, there's a lot of things that you can tidy up on in your trading. So if you're interested in any of that, again, you'll get an email from a recruiter in the next 24 to 48 hours in the email that you put in to attend this webinar. Just reply to them and say, hey, you know what, I definitely want to check this out. Can I please get a username and password? And they'll get you set up right away. That's about all I have, John. Do you want to cover anything else?
No, I appreciate it. I've had a lot of questions. My fingers are cramped up from answering so many questions. I apologize to anybody who didn't get their questions answered. If you do need additional questions answered, please feel free to stick around. We'll be here for a few more minutes. Some of the questions that I can see that didn't get answered actually did get answered because you just asked before we brought it up. So you should be good with that. But I'm going to take a few minutes and look through any of the questions that didn't get answered and make sure that you're all taken care of. But you can always find us here at Maverick Trading. I'm John, Jon, at Maverick Trading. If you have any questions, feel free to send them, and we can get everything taken care of. So
what happened to the H in your name?
luckily, my parents realized how useless it was.
No, luckily they said this kid's never going to be able to spell 4 letters. Let's make it easy for him.
You don't want to put any silent letters in there. Sadly enough, if I really look at my entire name, I have several H's. Because I'm Jonathan. I've got 2 H's in my last name. So, but yeah, Jon, Jon at mavericktrading.com. Feel free to send me any emails with questions, and we'll get everyone taken care of. So,
hey, one thing before we officially sign off, I had a question, the very first question that came in from Peter, and he's like, "Hey, I don't want to derail the presentation, but what do you think about the report that Trump is considering raising tariffs on China from 10% to 25%. All right, now this is what we talk about every single Sunday, every single Wednesday. This is what we talk about with all of our traders. Here's what we do at Maverick is that there are what are called fundamentals in trading. And fundamentals are things like PE ratio, growth rates, how good is the company selling its product, how cool of a CEO do they have. All these things that are they're indicators of what a stock should do, but stock doesn't necessarily follow the fundamentals. We are technical traders. We do only technicals, and it really bothers me that. So when I first started in the business, when I told people I was a trader back in 1997, people laughed at me. People said, "Oh, you can't make money trading. No one can make money trading. That's a fool's game. Only this, you have to make money buying and holding stocks." And all of a sudden now, today, it is a different world where we literally have shows like Fast Money talking about trading. But the thing that bothers me is that they're still doing kind of the old school Wall Street of, hey, this is a good company. We like where it's going. We like the management. And we think the chart is nicely trading above a 20-period moving average. Well, those are completely different. We are 100% technical. 100% technical. So, Peter, when you asked me the question, okay, what do you think about Trump raising tariffs? We've known about this for the last 2 months. The week that Trump officially announced the tariffs on China was 3 weeks ago. Guess what happened that week? The market went up. The market went up. It didn't care. So, what do I think about this report that they could raise tariffs more? I think the market is going to do what it's going to do. Now, yes, it might knock it down, but we are in a bull market. And the smart money was to be on the long side up until 2 days ago, and then on Friday it came tumbling down. But we were overextended at that point. So, I'm a big believer in market action. I don't want to know what the news is. I want to know what the reaction to the news is as a trader. So the reaction to the news of tariffs has been the industrials have been hit a little bit. The multinational companies have been hit again, but yet they've rebounded the most over the last 2 weeks. But tech just kept going. Tech kept going. Consumer kept going. All the sectors kept going. Right now, healthcare is super hot. So in the end, the market action is the most important thing. And the fact that the market has gone up during this whole talk of tariffs tells me we're likely going higher. So that's just my opinion on that. Take that for what it is. I've been wrong many times as a trader, so I won't even feel bad if I'm wrong about that. All right. Hey, thank you very much for joining us. Like John said, we'll stick around and answer any questions we can, but if not, everyone have a great rest of the night. Take care.
We've gone over a few minutes from where we wanted to be, so let's let everyone go that's gotten what they need out of this, and anyone who still has questions, feel free to stick around for a few minutes and get those answered. Thanks, everybody. We appreciate it for taking the time for us this evening, and we look forward to speaking with you guys. Take care, everyone. Cheers.